Well, good morning, everyone. Hope you are having a great day so far. It's been kind of a bust of a week so far. Let's call it what it is. Price hasn't been great. We've just been kind of stuck chopping around. We're still stuck within trend, and we need something to happen for this to change in the crypto market. And I will say that there is something that is actually coming this next week that is happening despite us being in a government shutdown. Could this be the moment of pivot for the space? I want to talk about that in this video. I want to look at where things have moved to over the last 24 hours. Do also want to talk about something that Charles Hoskinson had mentioned as well. So if you guys are new or haven't already, show your support for the channel down below. Hit that subscribe button, that bell. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So looking at ADA, despite us having a red day yesterday, despite us dropping all the way down to almost 79 cents, we had a great bounce back in the back half of the day. We actually got back within structure. We're back above our 100-day moving average, and ADA's looking pretty comfortable here. I love that stochastic RSI is dropping. We a lot of times when we've gotten up to this overbought range, we've gotten a full reset. So we'll see if that's the case. Sometimes we get a mid-drop pivot, kind of like we saw back here in the middle of September. But we're still in our channel here. We're still in our channel inside of our channel. We're looking pretty good. Volume across crypto market is still very, very high. Actually, just taking a look at this, we're talking almost $200 billion. So we're dealing with some pretty aggressive chop in the crypto market. We're dealing with liquidations both directions. I will say BTC did fall back within structure. Just know that we might be on a path to head down towards our 20-day moving average. That's down at about 118,850 right now. We actually got down to 119.7 yesterday. So I obviously want to see more green in the crypto market, but we're seeing aggressive leverage right now in the space. So the market makers are just having a really good time throwing things around left and right. Really good day from Ethereum yesterday, despite it being red, bounced right off of our 4250 level. That's a great sign here. Again, we want to keep holding this. We don't want to dip down like we did back here. Granted, we are building again that potential inverse head and shoulders like we were talking about here. Left shoulder, head, right shoulder, neckline. So just note that this really seems like again that big gather step like we've been talking about across the crypto market. Still waiting for the moment that USDT dominance gets its next extension to the downside. What's interesting enough is I was looking back at USDT dominance and I noticed that most Octobers, at some point in October, that's when the pivot starts to take place, when you truly get this confirmation push to the downside where we get a little surge in the crypto market. I'm not saying this has to happen for sure. Obviously, we're in a pretty freaking boring time right now. I'm sure everybody can agree with that. But there's going to be a moment where this does in fact break. And could this in fact be next week? Now, I did want to mention, first of all, before we get into that, still another good day from institutional money. We still saw BTC bought yesterday. We did see some ETH dumping to the tune of $8.5 million. But right now, both these, for both Ethereum and BTC, these rank within the top 10 largest weeks in history. So they have been had massive accumulations. Now, again, it's been quiet. It's been boring. There hasn't been a whole lot of news. I get it. But next week, we do have something that is taking place that has caused volatility in the crypto market. We are getting our CPI report next Wednesday. Now, yes, we are still getting this despite the government shutdown being in effect. The reason why is actually this is used when it comes to Social Security adjustments. So they need to release this data based on the cost of living models. So this is something that is going to happen. We'll obviously see. Hopefully the data comes back good. Maybe people have limited spending because of the government shutdown. Obviously, this data is technically from last month, so we might not see any impact from that at all, but just something to be aware of nonetheless. Now, that being said, there was something that Charles Hoskinson had actually mentioned that is worth this discussion, because we've talked about and mentioned this several times before. Hoskinson has said the Bitcoin 4-year cycle is dead, predicts lower price spikes and dips. So this has been a big sticking point for many people in the industry. There are people that say, yep, 4-year cycle is still intact. We're done here in October, November, and we're heading into our bear market cycle. Other people have adjusted their way of thinking and said, hey, this is expanding. The market cycle is expanding. We might be in line with a 5-year business cycle, which would mean 2026 would be somewhere around the top, or we're potentially entering even a super cycle because of the entrance of institutional money. And it's like I've said many times, is once institutional money starts to get in, they are not going to take that much of a bath on assets. They actually tend to hold up the market better and better. Now, you also have a major portion of retail that is here, that has been here for the long haul, that has been accumulating, that has massive conviction, that is unwilling to dump their assets. That is providing more stability in the market than we have historically seen. It doesn't mean there's not going to be red days. It doesn't mean there's not going to be retracements of, 30, 40, 50% like we've seen here. But if you haven't noticed, the baths we've been taking have been less and less and less. Now, does this in fact bring us to a point where we just see something similar and repetitive almost year after year, where we kind of get this late season push and then just a boring ass 9 months or so? Potentially. If ADA does what it did last fall and what it did the fall before that, we might be on the verge of a 300% move, which, right now that would take ADA up to, what is that? Was it a 200% move? No, 300% move. Where ADA actually runs all the way up to $3.20. All right. Could that be what we're about to do? Maybe. I'm not saying that's going to happen for sure, but we're noticing some very repetitive signs here. And that would actually be the move that causes ADA to break out of structure. Would obviously be setting a new all-time high. Maybe the narratives change there, but then maybe we get, a 60% retrace off that. That might be the path that we're headed down. Unfortunately, right now, there's a lot of mixed data that's out there. We haven't really seen retail outside the space spark up. A lot of times these movements are just very abrupt and they happen without warning. Just take a look at the charts. You get into these consolidation phases where price isn't moving. In fact, the first time this took place, we were chopping for a month and a half and then we finally exploded. The most recent time, we were basically chopping for 3 months. Nothing was happening. Yes, we had some volatile spikes here and there, but then we just exploded out of nowhere. It seems like now we've had ADA stuck in this period of chop for, 60 days. Do we have another month until things break out? Maybe, maybe not. I would actually argue that right now there's even higher conviction than there was back here. You have the people that have been here holding a higher concentration of supply, and we're just dealing with, again, some of that volatility due to leverage liquidation. So that's kind of where we're at. Those are my thoughts on this. Again, I think this market cycle is extended. We've talked about this for a very long period of time. I think that the dips are going to be less. It also means that you might see limited movement to the upside. It might be more gradual as time progresses too. But at the same time, if we, run up to $3.20 later this year and we retrace down to, let's say, $1.20 or $1.30, right? And then we do another 300% move off of there, it's pretty dang close to $7. Just saying, right? So that's kind of my thoughts. Love to hear what you guys think. It might be a boring Friday. Friday tends to be pretty quiet in terms of institutional money. We've obviously seen this kind of slowing down as the week has progressed, and maybe the market is just waiting until next week's CPI report. So I appreciate you guys as always. I hope you enjoyed the video. Let me know your thoughts below, but have a great day. Catch you guys in the next one. Take care.